In the studio with me. Good morning, Kate.
Hi, Catherine.
We're going to start off with a story out of Luxembourg this week. Now, European finance ministers, they're sort of pulling on their boxing gloves, getting ready to clash with France over the budget here.
Exactly. Paris has to submit its 2015 budget for approval by Wednesday, and it's almost daring the EU to reject it, with a budget deficit far exceeding the promised target. Now, despite the threat of rejection and possible financial sanctions, the French Prime Minister has said his government will not budge, insisting it's already gone through a lot of painful cost-cutting. Yuka Royer has the details.
Heading for a showdown. France's Prime Minister set the tone over the weekend, ahead of the EU finance ministers' meeting in Luxembourg.
They must respect France. It's a big country, a sovereign country, politically, militarily, but also economically. I don't accept that they give us a lesson on good management.
Valls' comments came after the chairman of Eurozone finance ministers said the union should not give France extra time to bring its deficit down. Jeroen Dijsselbloem criticised Paris for failing to undertake needed reforms in the past 2 years. Under the new, tougher EU finance pact, France had promised to bring its budget shortfall below 3% by 2015. Instead, its plan for next year, set to be rejected by the EU this week, sees the country running on debt at 4.3% of GDP, despite more than 20 billion euros spending cuts. Paris says it will meet the 3% target, but in 2017. At last week's Job and Growth Summit in Italy, the French president ruled out any more austerity, calling instead for stimulus.
We need to adjust the rhythm for our budgetary policies to prioritise growth. That is what's at stake today. We must all turn to growth, because we're all concerned.
If France ignores the EU's demand to review and modify next year's budget, it could face a fine of up to 0.2% of GDP. While promising to accelerate fiscal reforms at home, France's new pro-market economy minister Emmanuel Macron proposed a new deal in Europe to boost investment and growth to the tune of 300 billion euros.
All right, perhaps a tough start to the week for French ministers. Is it a tough start to the week on the markets?
It certainly is. We're seeing the markets following the very negative trend that we saw last week. European markets have just opened, starting out with red across the board there. You can see the CAC 40 here in Paris and Frankfurt's DAX index both down nearly 1% as trading begins. We saw a similar story in Asia, those global fears about stagnated growth dragging down trading. The Nikkei's closed today because of a holiday in Japan, but the Shanghai Composite was down quite heavily there. Investors showed little sign of relief at some fairly strong trade figures that came out of China. Chinese exports actually surged 15.3% in September from a year ago. That's more than expected and the fastest pace in 19 months. Imports also rose about 7%, despite forecasts of a decline. And one of the main reasons for this boost was actually the iPhone 6, which is made in China. The customs department near that Apple factory reported 6.2 million new iPhone models that were exported in the first 3 weeks of September. That could continue to add about 1% to overall monthly exports throughout the rest of the year.
OK, take us through some of the other top business headlines of the day. Then we're going to start off in the UK. A government plan to boost public finances.
Exactly. The government's trying to sell its 40% stake in Eurostar, part of a broader sale of corporate and financial assets that it hopes will raise some 25 billion euros by 2020. The government's asking for offers by the end of the month. France's National Rail Service owns 55% of the cross-channel train operator, and Belgium owns a smaller percentage. The co-chief executive of Luxottica is stepping down after just 6 weeks on the job. Enrico Cavatorta has reportedly been clashing with the Italian company's founder and chairman, Leonardo Del Vecchio, over expansion plans. Luxottica is the world's largest eyewear company, with brands including Oakley and Ray-Ban. And hundreds of demonstrators gathered in dozens of cities across Europe this weekend to protest a proposed free trade deal between the US and EU. Negotiations of the so-called TTIP began last year, and officials say it would boost the EU's economy by 120 billion euros a year by removing tariffs and red tape. But protesters fear the deal could result in lower standards of safety for food, consumers and the environment. They're calling for more details to be released.
All right, thanks very much for now. Kate Moody with an update of the business news. We're going to move on with a look at the international